Harris proposed this unrealized capital gains tax. It's for those that are worth over 100 million.
What if you don't have the cash to liquidate to pay this tax? Then you find yourself in this revolving circle of having to sell off assets so that you can pay the tax bill. Not only that, what happens when the value drops? That's the part where it always bugs me.
Trump is calling for making his 2017 tax cuts permanent.
The biggest thing that he gave was QBI deductions, qualified business income deduction. They gave you essentially a 20% shave off the top. And so it was very tailored to small business owners. But what else did that help? That helped real estate investors. Real estate investors were entitled to take QBI as well. Every pro and con to Harris's side, the pro to her side is increased government revenue. When in reality, we'll call ourselves capitalists. We're like, no, that's a terrible freaking idea. I think that's bad.
Based off of all the tax strategies that we're seeing right now, who do you think has a better strategy and why between the Harris campaign and Trump campaign?
Purely.
What is up, my friends? Welcome back to the JV pod. Today, we've got ourselves a situation. Harris, Trump, a whole lot of questions about what the future holds for us real estate junkies and business owners. It's like a choice between fixing a leaky roof or replacing the whole foundation. Neither sounds fun, but you got to pick. So today we're going to be talking about politics, and we're talking about real money. We're talking about real impact, and we're talking about these two candidates, how they might shake up the real estate world in ways we never saw coming. So grab your seat, grab your coffee. Let's get into it with Matt. But before we jump into it, actually, can you do me a huge solid? Go like and subscribe to this page. Not only does your like and your save help me continue to build in this podcast market, which is extremely hard, by the way. It allows me to bring awesome guests like Matt to the stage. And not only that, but it gets me in front of more people. So if you could please do me that huge favor, you guys would mean so much to me. So let's jump into it right now with Matt. I have my buddy up here who's not just an enthusiast of flying planes, but he's also a big supporter of taxes. And hopefully not the kind of taxes that you got to pay on a regular basis. And today, Matt, we're actually going to be diving into a subject that I've been wanting to talk to you about for weeks now, man. And we're going to be talking about Kamala Harris and Donald Trump, what those taxes are going to look like. But before we jump into that, tell us a little bit about who you are, man, how you got started. You've been a CPA for some time. And I've been following you for a long time, and you're doing some pretty cool stuff, man. So tell us who you are.
Dude, thanks for having me. So, okay, well, my name's Matt, obviously, Matt Bontrager. I'm a CPA. There's my license. I run a tax firm. So I run a tax firm called TrueBooks. I started in 2020, pandemic year. So we're going on year 5 right now. It's grown from, I did all the work myself for the first 8 months or so, then had some contract help, to now 30 people. So I feel like and I came from, I didn't even have a lot of management experience. So now running a firm this big is a little bit overwhelming, but man, we're trucking along and it's going great. And specifically, our firm specializes in real estate. So that's kind of why I'm here, obviously, right? You're in the real estate space. So we specialize in helping real estate investors, small business owners really strategize around their portfolios, short-term rentals, long-term rentals, mid-term rentals. And then now we're getting a lot of content creators, a lot of YouTubers with, a few million subs. We got, a couple over 10 million that the kind of money that they're making online is nuts. Some OnlyFans clients, that's always, it's nuts. The internet is nuts. You think it's monopoly money.
Do you trip out on that? Do you trip out when you see like an OnlyFans? Like, do I need to start an OnlyFans? Do we need to have like an OnlyFans account, Matt? What's going on over here, bro?
We've seen multiple OnlyFans over $1 million a month net.
No way, dude.
And if you think about it, I shouldn't even say net. Like, that's a big thing. They don't have a lot of cost. Think about it. Like, you're just doing OnlyFans. What is your cost? But yeah, the numbers are absolutely insane. So I like it because I feel like it's really opened up how people can make money if you're online compared to like maybe the way our parents did it.
Isn't that like, I trip out on that all the time. I'm like, man, what a time to be alive that we can literally, I was actually just talking about this to somebody the other day. I was like, dude, it doesn't matter what you do. And I even brought up this stupid analogy. So let's hang with me for a minute. Everybody listening to this or watching this, hang with me too. Have you ever been to a beach before and you see rocks stacked up, Matt? Like, you just show up and
like where they do the cool little,
Yeah. Okay. So imagine if you're like a rock stacker and you've just been doing that for fun and you created a TikTok and then you teach people how to stack rocks. Like, dude, that could be a literal, like you can create a business out of freaking racks. Did I just say racks? Rocks slapping or stocking or whatever the hell. You can slap rocks. That could even be another. Dude, you can just walk around slapping rocks, dude. And that would be you can turn that into a business. I'm not even kidding.
Which I find interesting because I feel like it helps you. Before the internet, you couldn't really find who ideally you would collaborate with or who would buy from you. Now with the internet being so big, which I always think back to that, I think it was Pineda who told me that, like, like less than 1% of the internet are creators. The rest of them are consumers. So when you think about how big that pool is, hey, I'm a rock stacker. Little do you know, there's 8 million people just in the West Coast that like rock stacking. So you would find that audience very fast being on the internet. So yes.
Yeah.
Yeah,
I
it's
think they're
nuts.
all
It's
in San
nuts. It's
Francisco
insane.
too, which is crazy.
Yeah,
But yeah, man, it's like you could create like literally a business out of anything. And the cool thing about like what you do is you get to see what that spectrum is. And I think that's a pretty like, you're in a good position too, because you can also see, maybe you get that shiny object syndrome. I would think you would.
Yeah. We got luxury car dealers. So we have some bigger businesses too that, are outside of our small business and real estate realm. But yes. And that's what I like is selfishly, I like this business because no matter who I shake hands with, I can help them. I had to go to my 5th graders class the other day and tell people what I did. And I was like, I count money. That's my job. I'm an accountant. And so being able to see trends of how people are doing and how people are making their money, where they're spending their money. I'm fascinated with money. That's why I found myself here. So yeah, I love it. I love to be on this side of it. I'm able to help. I feel like I have great job security in the industry that I'm in, and I get to see a variety of people. And that's the last thing I'll mention is when you meet an accountant. When I first went into accounting, a lot of people would ask, "Oh, do you asked if I did taxes?" I didn't do taxes when I first started accounting. When you go into accounting, you are either going to go down an audit path or a tax path. Most accountants are like internal accountants at companies and auditors, not too many tax people. So now as the tax person, I can be the good guy and come in, and I don't necessarily walk around with a clipboard and write people up. I help them obviously save money. So yeah, it's great.
And a lot of that's planning too, man, which is, I think it's important, especially for high W-2 earners. Like you got to plan your year. I got slammed my first year. I did $1 million because like I just didn't. You probably see this all the time. A noob that like gets lucky quick or comes into money fast or creates a business at the right time and all of a sudden takes off, doesn't put money aside. That was me, dude. 2021. I got slammed by that my first year in coaching. Yeah, I had a $700,000 tax bill. We did 1.8 million in the first year. I didn't expect that to happen. I thought that was freaking wild. And I had to pay 700 grand. That's even after buying real estate, after doing all this stuff, like depreciation all over the place, STR depreciation, still had to pay that. And it's wild, dude, to think about. Cause I mean, you don't think about those things when you're making cash. It's like, and you're putting money back into the business, and it could really freaking slam you. I'm talking about champagne problems right now, which a lot of people listening to this are probably like, all right, dude, whatever, man. But again, like all it takes is a couple ideas sometimes, something to go right, and all of a sudden you're in the right position.
And you're coming off of a great time too. So yesterday was we call it our Super Bowl, like the largest tax deadline there is. It's the drop dead, final deadline, October 15th. So a lot of the conversations yesterday are whether it's an angry person that's like, oh, why is this tax bill so large? And they don't have tax planning. You know what I'm saying? So like now you realize when you start making money that you got to plan for this throughout the year.
Yeah. Yeah. And I was slammed. And I know a lot of people run into that. So if you're going to make some cash, or if you think you're going to make cash, make sure that you're connecting with Matt. Because you got to put your stuff in order. There's no reason why you shouldn't be, even if you're not making that. If you're not making $1 million, I should have been tax planning making 250,000.
You said 250. You could be making. I tell people, when do you hire a CPA? I think if you're making 60, 70, 80 grand, at least self-employed. If you're a W-2 earner and you make 70, 80 grand, there's really not much you can do. But if you're making 70, 80 grand and you're self-employed, you have a whole new world of tax strategy and opportunity you can do. So I tell people when you're self-employed or when you run real estate, when you own real estate, a rental property of some sort, your tax situation is so completely different now. You're entitled to deductions purely, as an owner or a landlord. When you just get a W-2, you can't have that. So that's where even $250,000, you got somebody watching this and they're making 70 grand, making beaded bracelets, selling them on TikTok, that you have serious tax strategy you can start to consider. So yeah, that threshold is really low.
Stacking rocks, dude.
Or if you're stacking rocks in San Fran, exactly.
Yeah, you gotta make sure to connect with Matt on that. All right, so I'm gonna dive into stuff. So if you guys haven't watched Matt's OnlyFans video, I'm just kidding. If you haven't watched Matt's Instagram channel yet, he has these green screen things, and he talks a lot about the Harris plan when it comes to taxes and the Trump plan when it comes to taxes. And I'm really fascinated by this because I think most Americans don't actually really know what those tax implications are. And you've been really kind of able to pay attention to these things, see what's happening, and actually see what could potentially happen come November when it's time for Americans to vote on who their next president is going to be. And One of the things, Matt, that I really looked at, it didn't really bother me at first, but then it really started to, as I looked more and more, deeper into how politics go. It usually starts with one thing, and Harris proposed this unrealized capital gains tax for those that are worth over 100 million, and that's like really stirred up some controversy, especially in real estate where values appreciate without being sold. So let's talk about that for a minute, because I do believe that how can this actually impact real estate investors that hold, that they're holding onto properties that are going to make cash, but then also how is this policy set a precedent for effects that are smaller down the road? And that was my worry, is like it starts at this big place and it can trickle down and get to somebody that makes $1 million. So let's break that down for a minute.
I love the last piece that you said there, because that's where I truly start to think about this. A lot of people are, I'll be honest, in the tax world, we could give a shit about this, if I cuss you, sorry, you just blurred this out. But
No, you're good.
I could care less, because sure, I'm not handling clients that have 100 million liquidity, right? Or worth $100 million. But as you said, that could start to trickle down and set a precedent for now. Okay, now it can happen to the next millionaire around the corner that's worth $1.50, $1.5 million with a few rental properties. So the first thing that I think about this is, in the tax world, we're kind of scoffing at this. Every time somebody asks me about this, I almost laugh at them like, why are you worried about this? One, ideally, it's only going to hurt that person that's right at the 100 million. But two, I truly don't think it's going to happen. And other CPAs don't as well, from sort of the my sphere of influence, right? CPAs talk, right? We're all friends. But, and just to kind of recap what we're talking about, right? This is a tax on unrealized gains.
Yeah.
Simple terms, you buy a stock for $100, you sell that bad boy for $200, you have $100 gain, and you will pay capital gains tax on that $100. Whether it's short term, that's ordinary rates. If it's long term, you held it more than a year, you'll pay long term. But let's say that you never sold that stock and that thing is worth $200 now, and the government's going to come in and say, well, hey, you now own something that is twice in value, 30% more in value, whatever it is, and they're going to tax you on that. There is a litany of problems that go on with this. The first thing is, let's think about the liquidity of this. What if you don't have the cash to liquidate to pay this tax? Then you find yourself in this like revolving circle of having to sell off assets so that you can pay the tax bill. This is similar to a client where, right, we work with a lot of high W-2 earners in tech that have real estate portfolios. Well, they get a lot of RSUs. Well, it's like they'll get RSUs, they'll cash out the RSUs, not really know that they're going to have a tax bill coming. And that's right, like when they come to us. And then it's like, well, they find themselves liquidating more RSUs to pay the tax bill from the first set of RSUs. So in this whole unrealized gains tax thing is, well, one, what if I don't have the cash and it's tied up in the actual asset to pay the tax bill that you're about to hit me with?
Exactly.
And so not only that, what happens when the value drops? That's the part where it always bugs me. Like, what are you going to do? Are you going to pay me back if now the value drops next year?
It's so like, we're going to give you credits, tax credits.
Exactly. So it's like, what are you truly going to do here to watch these assets fluctuate in value? And who's going to be the determining factor of what the value of the asset is? What if you can't go to the open market and determine, oh, well, these stocks are publicly traded, so I know what other people are paying for it? What if it's a freaking house on the beach that your third grandma left you?
Yeah.
And now you're like, oh, okay. So that's my biggest problem with that. And then I have some notes here is, the pros to this, any sort of pro when it comes to looking at Kamala's and Trump's policies, most of the pros are obviously increased tax revenue. That's what she's trying to do. That's what that government's trying to do. So then you really get into this further argument of, well, do you think the government is going to be better at spending these dollars than, and that is where you could do a 4-hour episode on that. I would say no. And I think the best example that I'd go is like, look at all this Starship SpaceX stuff that's going on. Like, I don't know. I'm a CPA. I don't know anything about space, but I've watched 8,000 videos already of these chopsticks that Elon developed catching this Starship, and I find it fascinating. So when you look at how the government deploys its dollars versus the private sector, I'm going to put my money that the private sector is going to deploy the money. So anyways, unrealized gains, I think it's a hoot that honestly, I could never see this passing. I really can't.
And if it does, this is the thing that I said at the end that you hit there, is that if that goes for 100 millionaires, and then in 5 or 7 years from now, that could go down to the millionaires. And just to give you guys context of this, there's 30 million millionaires out of 330,000 people in the US. So, and this is a statistic I wanted everybody to realize. 1 out of 11 people are millionaires. Like, I'll take those freaking odds all damn day long. Like, I used to be, Matt, I'm going to be super honest. I used to think, and I'm getting goosebumps talking about this, I used to think that was unobtainable for most people. If I had somebody come to me and say 1 out of 11 people today, and I was like 20 years old, is going to be a millionaire, like my brain would automatically go, if I had the same mindset that I do now, I was like, dude, that's totally obtainable, totally doable.
Yeah.
1 out of 11, like totally doable. So then you look at this tax proposal and you think, okay, 100 million now. Okay, this makes sense. So Grant Cardone, all those guys that are doing those kinds of things, they're going to get taxed like that if this was to pass. But then who knows, 5 to 7, 10 years down the line, our kids are going to get hit with these types of taxes. It might even be a million and 1.5, 2 million. And again, we just talked about the odds of a millionaire. 1 out of 11 people. That's like 9.1% of the population is, millionaires, which I think is, again, like that's pretty good, dude.
That's killer.
I think that's pretty awesome. So let's dive into this. So we just talked about unrealized gains, which again, I don't know how the hell they would end up paying that back or what that would even look like. And that, honestly, I think that would cause even more issues. I mean, who's going to be looking at these things? Who's going to be looking at realized gains, unrealized gains? Like we already talked about the government not being able to spend money eloquently, right? We're watching private sector do a lot of things, which I think is crazy. But the other thing that I'm talking about, we're hearing about more corporate tax hikes under Harris's campaign. Trump's push to cut them. I think that's always been a thing. Trump's always talked about cutting taxes specifically for on the corporate side. So for real estate companies, that could be 28%, corporate tax, and that could kill development projects and other things like that. So what's your thoughts on that? And is that beneficial? What are your whole entire thoughts on that whole tax plan that let's actually compare them real quick on this plan.
Mm-hmm. So first one, I believe on this specific case, Harris is trying to bump, which here, I have a note on that. Let me look at this. Hold on.
Yeah, let's
this
check
is
out the
for
notes.
Specific to business. It was current law is 21%. 21. So for corporations. So like your Amazons, your Googles, C corporations. This isn't, individual tax rates and small business tax rates, 21%. Harris and Waltz are trying to bump 7 points up to 28. Mm-hmm. And then you have Trump and Vance where they support lowering the corporate tax rate by 1 point down to 20. And they support a 6% decrease in the corporate tax rate for companies moving their production onshore to 15%. So they'll take you from 21 to 15 if you have production onshore. So they're trying to, as you can see, make companies reinvest in onshore production so that we become, I would assume, more self-sustainable. So we're not shipping jobs out to China and these other countries. And then when you look at the pros and cons of this, again, you look at one of the pros, increasing government revenue, which you could say, okay, goes back into public infrastructure and, other, let's say, public real estate activity, right, in those developments. But then you think, well, when you look at the private sector, if I have higher tax rates, I'm less incentivized to go into those projects and deploy. And one, what does real estate really require a lot of the time? Debt.
Yeah,
so
that's true.
If my projects are more riskier, I'm less likely to do them. I'm less likely to want to go out and take out debt. I'm less likely to want to put a lot of liquidity into these projects. So I think overall it's going to stifle the growth. And I think that's always the struggle of raising and lowering taxes. And but overall, though, you can see it's a clear difference. They're still trying to lower them by 1 point versus Harris trying to bring them back up. And I just think overall it would slow the development of real estate projects overall.
I don't understand what the government does with the tax dollars. Like I mean, California, like, dude, I was just looking at this. I was just looking at this a couple days ago, and there was so much money that has been just circulating around since COVID. Like, I don't remember.
We were calling it helicopter money. You remember PPP loans?
Yeah. Oh yeah.
Oh
PPP,
my God, bro. Oh.
Everybody was getting cash. In fact, the company that I worked for, dude, it was like I worked for a multi-million-dollar company. This is like right when I quit. My old boss got like brand new cars, bought this badass house in freaking Foster City here in the Bay Area. And I was just like, where the hell did he get this extra cash? Because our checks were bouncing, bro. Like months before that, like our company checks were bouncing. And I was just like, damn. But yeah, the PPP money came. All of a sudden we got paid. This dude got a new house. He ended up getting sued and stuff later on down the line, and ended up having to pay back a ton of money to the government. But I don't know where that cash goes, dude. I don't trust that at all. You guys, I don't feel comfortable with money going into the government's hands. And not only that, but it just feels like everybody's trying to save as much money as they can. I get people all the time that are like, man, you're making all this cash. Like you should be paying your fair share. And I'm just like, yeah, I totally agree with you. Like, I think if you make money, you got to accept that you're gonna be paying taxes, part of the game. But when it's like 40%, 30 something percent of your cash that comes through, we're like, that's crazy to me. And again, I'm in California. Where the hell is that money going? Because I just went to San Francisco this weekend, and guess what? freaking nightmare, dude. A mess. That city is a mess. Oakland, the whole Bay Area is a mess. And you just look at the there was literally, I don't remember the amount, and the internet can correct me on this. I think it was like $3 billion or something like that. And California's deficit is like super, like they spent a lot of money. A lot of those billions of dollars are spent already. And like on what? And that's what I don't necessarily get when it comes to politics. And which is why I'd rather, have our money that we can keep and,
have the business owners and the corps spend the money.
Exactly.
The PP, so many people are going to go to jail over that. So many people have already started going to jail over that. Yeah. That is a best example of government not having, in this case, the right amount of red tape, because that's why government sucks, right? It's so bureaucratic. You got to jump through a lot of hoops to do it. But we literally were calling it helicopter money in the tax base because it was, you filled out a couple forms. We didn't flock to that work. We didn't support people doing PPPs as far as like, we didn't offer it as a service. People would, we weren't pitching online, come do PPP. You're entitled to this much money because they weren't regulating who should get the money truthfully. And so what's going to happen is now a lot of people have to pay it back. Certain people are getting locked up because they're not doing the right things because you had certain stipulations of what you had to do with that money. But I think it comes back to too, is like the government is not going to spend the money appropriately on the right things that I think is benefiting the public, or in this case, a city where right, like where they're collecting those tax dollars. And it makes me think of that story where I'd seen something online, and the other day I was thinking about this. When you think about the shift of, well, what is the incentive for the government to have these programs and spend money in certain areas? If you think about it, it's really to just shuffle money back to certain government employees. And, there's backhanded deals. We're businessmen. You meet people and just before this, we're talking about the conference. One person might not be able to make it. I'm like, I want to make it. So this is not a backhand deal, but where people talk and they do business together. You think the government is any different? So when I heard something where it was like, they have these huge military contracts and they're paying like $90,000 for a bag of bolts or something. And I'm like, no wonder you don't give a shit about spending $90,000 on the bolts, because one, the money's not yours, it's the government's. The government's going to print more money, but whose pockets are you really filling? You're filling the executives and the employees of these government contractors. So when you think about it, the money isn't going to where it really needs to go. And because the government's spending the money, think about it. If I did CPA work for the government, if you came in, government was like, dude, you know how to run midterm rentals. We need to see what the hell's going on here. You'd charge the hell out of them. You'd say, okay, I want $300,000 for a 5-day webinar, or 5-day in-person workshop. They'd say they'd spend it because they have it. And so just the asinine amounts that they're spending from the government for things that someone in private practice would pay a fraction of the cost for, it's just all corruption inclusion. So it's like, it's really sad because those dollars would go so much further if that same amount of money was spent from actual businesses trying to get the work done themselves.
Yeah, I actually think the PPP program, which was actually called the CARES Act, I remember that when I worked in healthcare, it's called the CARES Act. Donald Trump actually put this together. I just didn't think that they realized, because it was quick. Like everything was put together like this, dude. It was
very fast.
I think COVID hit March 14th, and on the 27th, and internet, I'm sure you guys can go. I put some notes together on this, and I'm pretty sure I have it right. March 27, 2020 is when President Trump put that in effect, which was the CARES Act for small business with the SBA. It was like you had to go to you had to connect with the bank and stuff like that. But there was a lot of businesses that were like, dude, overnight screwed, like just like that. And they needed to have cash to continue to move. So I did understand that to a certain degree, but then I also there was no boundaries with it. I think it was just like, we got to figure something out, but then there was no boundaries to it. And then you had the next, Biden that came in office, November of that same year, which I don't even think they changed any of the policies at all. I don't think they messed around with any of that stuff at all. So it continued to stay what it was. But
then they ended up having ERCs.
What is it called?
Like the ERC, Employee Retention Credit.
Got you. Okay. See, I don't know anything about that. Got you.
That was basically if you were still forking out costs for payroll during a time when most businesses were shutting down, then you got that money back. But one of the biggest things that people forgot is this is where tax is so nuanced. ERC, when you received money that was basically a credit back to you for keeping people on payroll, you had to go back and change the amount of deduction that you had to account for the money that you got from the government. No one was doing this. So when people got, ERC, had to go back and now adjust for it, they're like, well, why am I doing this? I'm paying tax on it. It's like, yeah, it was never not taxable to you. It was simply like an upfront cash benefit. So
yeah.
But
It's
I would see
crazy.
though too why that happened that way, because you're right. These programs were scrapped together very fast, which I would say good for them. You needed to in a time like that where I feel like shit was chaos.
It was. Yeah, it definitely was. I remember I was actually working in a company in San Francisco, and the mayor at the time, I don't remember, at London Breed, she shut down the whole city. And I remember we had a high rise building right in San Francisco. And dude, I was just looking up the road and it was like, it was dead. There was nobody moving around, nobody doing nothing. Everybody was in masks already. It was all freaking crazy. I
Ugh.
didn't know what was going on, dude. I didn't know. The only thing that I knew is that I took money out on my property. I did a refinance and it hit like a week before. And I took all that money like a maniac and put it into Moderna, 25,000. And guess how much that ended up turning into
225 at least.
in a year and a half?
50K you put in?
Yeah, it was 48,000 in one stock, dude.
What a freaking cash in, just all eggs.
Tell me,
Dude, it's got
just
to have at least 5 times. 250, a $250,000. What was it? I don't know. High.
$387,000.
Yeah. 7-8
Yeah.
times that. Damn. You still have a lot of it, or did you cash out?
I cashed out. I cashed out and I used a lot of it and I quit my job. And yeah, that's how I got this going, dude. Cause I was like, I have a cushion right now. I have a cushion to be able to continue to do. Cause Moderna shot up. My family was like, you're so stupid. Why are you putting money in this? I'm like, dude, every person that's ever made anything looked at the way that the economy was rolling. And what is the future? Like what was the main thing in 2020?
Yeah.
Get a vaccine. Why not put your money into something like that? Like that's what everybody's talking about. They're like, we got to get a vaccine. We got to do this. I'm like, I'm putting my money on Moderna, and I did, and it ended up paying off, dude. And yes,
dude,
I had
that's
to pay
such a cool story because yeah, especially if that gave you the cushion to start the business too.
Yeah, it allowed me to just back off and do my own thing. And again, I had to pay for that later on, but we put money aside.
Yep.
I already knew that was going to happen when you pull out on stocks like that. It's freaking crazy. I wish I would have did it different now. I probably would have rolled it into an IRA account or something and then borrowed against it or borrowed. But Moderna ended up dropping, dude. I sold it at the right time. I sold it at the perfect time. There couldn't have been a better time to sell it. And I was like really hesitant. I was like, should I do it? Should I not? I remember like I was on Robinhood and I was just like,
I was going to say just sitting over your Robinhood app like, oh God.
Dude, I would like drive down the road looking at like the app and because it would just like go up and down. I'm just like, I don't know what I'm going to do, man. And I made the move. And again, I could have lost all that money. That was, I mean, in hindsight, I'm saying it's a smart idea now, but in reality, like my family was right saying, dude, you're freaking stupid. You're going to lose 50 grand. And it ended up working out. But I just thought about it. I'm like, if you look at any time in history, during dislocation in adversity, like those types of moments are when millionaires become millionaires or people like, if I would have had 150 grand or 200,
oh my gosh.
You know what I mean? Like that's where those people really come up. And that's what happened. Like people got so freaking rich during COVID. A lot of people did. And a lot of people hurt too. So like you had these two ends of
it was very fast.
Yeah, there was a big gap between the wealthy because they kept making money and they figured out how to do that. And then you had the people that were poor on the side that didn't have the income to do that. They were struggling, right? Plus the government was giving money. People started quitting their jobs and just relying on that and like actually making more money than they were making when they were working W-2 jobs. And
yes, that was a struggle.
It definitely was. Like we couldn't find cleaners for our short-term rentals to come in. Like our cleaners just all quit, man. They were just like, we're making more doing this. Like, why am I going to come into work? And I'm like, I mean, I kind of get it, but also like it's kind of nice to work, and not just sit at home all day long. But
I feel like COVID killed a lot of the labor market a ton.
100%.
Like now I'm always joking, like when you like, dude, I remember going to like a Chipotle similar to like somewhere in the airport, and you could just tell just like and I'm being rude here, but just like young, dumb kid that like no eagerness to him, lazy, and was ready to close. And it was like 15 minutes before close. He just gave me the rest of the food that was in the tray so he can close early. I'm like, bro, you fucking lazy. Like, what?
Yeah.
Like, and so I just look at that now. And then one of the other best things that came out of COVID too, though, was the freaking meals and entertainment. It was 100% deductible. So for us accountants, we were preaching that like, hey, this is the year to run it up and take people out to dinner. And so that was always a funny, but you can see though, that's a great example where tax policy comes in and they try to drive you in a certain direction. Well, who was hurting during COVID? Restaurants, vendors, things like that. So what do? They allow people to, hey, we're going to let you write off 100% of what you pay to these companies. So yeah,
it's freaking wild.
What a wild time, man. What a wild time.
I know it's crazy to think about. Like, I feel like that time in my life is like a big blur. Cause like just everything happening. There was just a lot of stuff going on, but everybody was staying at home and it was just crazy, man. But I want to get back to today. Let's talk about, and I'm glad that's done. Actually, I want to make sure I say this on here because I actually lost people that I know to COVID and stuff like that. One of the guys that I worked with, it was a pretty young guy. He was probably like 2 years older than me. He died of COVID. He's also like super
Jesus.
unhealthy, a little overweight, a lot of overweight actually, which is one of the main factors for that. For people losing their lives. But dude, it made me realize that like companies don't care about you. Like they don't give a crap. Like they just want you to work. They want you to show up. And that was really what set me up for the Great Resignation. And so many people quit their jobs and became entrepreneurs at that time. And luckily, again, I'm going back to what I said earlier. Like I put money. It was like the perfect storm, perfect timing, and I took a risky, stupid bet on something that ended up paying off. It could have went the other way too, right? But I think again, if it wasn't for that whole black swan event, we wouldn't have accelerated. Especially me being in the midterm rental space, like we house a lot of people that are digital nomads. There's 35 million people that work remote now, and they just kind of go from place to place. That's what they do, and it's kind of cool how that. And I'm saying this is the cool part of COVID is that it accelerated where I think we were going to get in the future, but it did it like so fast within.
Oh, that's a really good
year.
point. That's a really good
You know what I
point.
mean? Like remote work was eventually going to be a thing. It was heading in that direction, but
Yes,
COVID really just forced it to happen literally within months. Like it forced the entire
it did.
ecosystem. Everybody's calling to people to go back to work now. But again, I still think that you're still going to have a mix of both. You're going to have those two ends of, come into the office, maybe do a hybrid 2 days a week, and then you can go, work from home or whatever it is. But yeah, man, I really do believe it accelerated a lot of stuff, which I think, again, if you're going to take anything positive out of COVID, I believe that is a massive, positive takeaway. So yeah, let's talk about this right now, because there's another thing that Trump is calling for, and I'm curious to get your thoughts on this. He's calling for making his 2017 tax cuts permanent. And I'm in my notes here. I want to make sure, how have these affected real estate investors over the past few years? Are you familiar with the 2017 tax cuts?
Yep. Tax Cuts Jobs Act. Yep.
Yeah. So do you think that continuing them or stimulating further growth, like what's the benefit of actually, limiting that to already well-established, folks in the market or whatnot? What's your thoughts on that?
I think the data would show, I sound like a politician. I think the data would show, I think, which small business is where I want to go to next. So I had some notes on there too, which this will kind of tie into that, because he helped out small businesses tremendously, and standard deductions went higher, right?
Yeah.
So before, remember, you got a write-off for each person, like essentially, right? That we'll say was right, like an exemption, $4,000 a pop. Now standard deductions went higher, but the biggest thing that he gave was QBI deductions, qualified business income deductions. So this was a TCJA, Tax Cuts Jobs Act, new deduction, new proposal that allowed small business owners under certain revenue thresholds, obviously, because they don't want the rich people making over. I think if you're married, it's like around 450 grand or so. Single, maybe 300, 250, 300. But they gave you essentially a 20% shave off the top. So if your business netted 100 grand and that was your business, you'd get another $20,000 deduction, only pay tax on 80. And so it was very tailored to small business owners. But what else did that help? That helped real estate investors. Real estate investors were entitled to take QBI as well. And so when I think about the type of clients we help, at least, again, small, medium-sized businesses, those proposals I think were much better off. And the biggest one's bonus depreciation.
Yeah.
We all know, anybody here watching this, if they're in real estate, that is the Mac Daddy of expense that's really going to help you tremendously tax plan. This is, right, for those of you that don't know, depreciation is like you buy a larger asset. So if I buy like a phone or something for my business, that I can take that as a direct write-off. But you buy a car, you buy equipment, you buy a property, those larger assets you have to take over so much time, so many years. And bonus depreciation is basically taking a lot of that right now, which helps you. This concept is, hard for people at times, but you're going to make money in your business truthfully. But then on the P&L, when it comes to your taxes, you're going to lose money through that depreciation because it's such a large expense. So I think that, again, when you think about why Harris and Waltz wouldn't want that, well, they're trying to increase the government's revenue. That's like almost the answer. When I started to prep for this, knowing that we were going to talk on this topic a little bit, it's like every pro and con to Harris's side, the pro to her side is increased government revenue. When in reality, we'll call ourselves capitalists. We're like, no, that's a terrible freaking idea. I think that's bad. So I'd rather give the money back to the people, let them spend it how they like. And so what I saw from the TCGA was a lot. Small business owners were much better off. And what I'd be interested to see, though, more details on is the Tax Cuts Jobs Act. This sunsets in 2025. So next year we're running out of these provisions that he had put in place. So a little like kudos. This is why I love my industry is taxes are always changing. So people are always up in arms needing to stay up to date with what's going on. So we're also like on the edge of our seats. You saw a few months back, they almost brought back bonus depreciation, which would be huge for business owners and investors. But for me, I'm a proponent of keeping that. I think that I saw it help our clients firsthand, period. And I think that like, I'll stand on that because I helped hundreds of people that I saw them reap the benefits from that. Yeah, I'm in favor for keeping that for sure. I think that it would be better off.
The bonus depreciation, like that people talked about for cars, what is that tax code again?
So there's section 179 and then there's bonus depreciation. Those are different. A lot of people get those confused. You're going to section 179 things like cars, equipment, things like that. Real property by definition of IRS, that is all bonus depreciable. Certain commercial property you can get into the 179 stuff, but bonus depreciation and section 179.
Got it. And that went down from 80 to 60%, right? It was 100% for a long time. So 60%. What is it doing next year? Do we know yet?
40, baby. And that's the last year, which I still tell people, remember, it used to be 50. So even when we were in the 80, 60, you had people freaking out. And I'm like, relax. It used to be worse. So that you're still in a better environment than what it used to be. But we had a lot, for context. This was, again, 3-4 months ago. We had 40, 50, 60 tax returns that we're waiting on to file because we were waiting to see if they were going to change the rules so that we can go back to 100% bonus. So it was a very big determining factor that it had a lot of us on the edge of our seats what would have happened had that come? I guarantee you bring back bonus depreciation, the real estate market's going to go nuts.
Yeah, I agree.
Because of the opportunity.
And the car, usually at the end of the year, you'll see a lot of cars go off the shelves too, like crazy. In fact,
G-Wagons.
Yeah, people are getting G-Wagons, new
Hummers. I can't. If I see another Hummer EV, dude, I'm gonna lose it. The crab crawl Hummer. Yeah.
Everybody's buying those cars. And granted, like people that were making a lot of money in their business and needed to have that happen. In fact, it's one of the craziest things when you have a CPA call you and be like, hey man, like you gotta go spend $100,000 on something. It's the weirdest thing to do. It's what happened to me. My CPA call was like, hey, you need to go get like a truck or do you need a car or anything? Like you got to go get something that weighs over 6,000 pounds. Like you got to write some stuff off. And this was like in December, at the very end of December. We didn't plan it all. And that's what we ended up doing. But it's a weird situation, man. Let's actually go into 1031 exchanges because I want to talk about this for a minute. The 1031 exchange has been a key tool for real estate investors to defer capital gains taxes for quite some time. Do you think under the current threat proposed on any tax changes, particularly under Harris, is there anything that you might see on that end? Is there anything that, would losing 1031 exchange change the real estate landscape? Is that even something that's on the proposal? I think I saw something about that.
So that is another sort of, that would be, from what I hear, right in line with this unrealized gains tax in the sense of the second big piece that our clients and real estate investors specifically are talking about, because it would affect them the most, obviously. My thoughts on this, like I wrote here, the biggest thing here is if this were to pass, you'd see a huge rush in selling properties because they'd want to get their last 1031 in before. Again, for like a little educational tip, right? Or like section is, what is a 1031? You buy property A, it's $500,000. It ends up being worth 700. You want to now sell it and buy property B. Rules are you sell A, you buy B, and if you roll in your profits into that new deal, there's other stipulations and stuff, but if you basically take your profits, you don't touch them, you put them into the new deal, you can defer all that tax. Mm-hmm. So it was a huge wealth building tool for people to be able to trade up in these properties and grow their portfolios. Yeah. And my guess would be if you get rid of it, you're going to see a lot of people going through and trying to get that last trade up before that leaves. And again, you're just notching down something that was, right, as far as real estate, was one of the best investment vehicles you have, as far as wealth generation. Like I tell people, yes, I'm here to help you tax plan. But for me, real estate, I myself am a real estate investor. Tax should be the cherry on top. Real estate is a great wealth building tool. Mm-hmm. And so when you take away these key components like this, it just makes the asset less sexy.
Yeah. Yeah, I'm reading it right now. It says Vice President Kamala Harris supports a plan to limit benefits of the 1031 exchange, specifically capping the deferral at $500,000 per taxpayer or $1 million for filers. Any gains
$1 million for what?
$1 million for joint filers.
Yeah.
Yeah. So it says any gains above this limit would subject to capital gains taxes in the year of the property that is sold, which is freaking wild, dude, to think about. I don't think there's anything from Trump on that. I mean, he's got a ton of real estate. I don't see why he would ever do anything
He
like
ain't
that.
touching that. He ain't touching that. He'd leave that where where it's at.
Yeah,
And you could,
that's
so that's
wild,
kind
man.
of nice because then you'd help some of the smaller investors, like when you got somebody in Podunk, Iowa. Shout out to Iowa. I have family in Iowa. But they're trading Midwest properties around, then you're not really going to see that hit. But you find one person in San Diego, they're whacked. You can't
Yeah.
do that. If they're single, no way. 500 grand. You couldn't buy a shack in San Diego or California for 500 grand.
No, unless you move to the Central Valley where I'm at, you could buy a pretty decent house. Not a shack though, but you go to the Bay Area and where there's like a lot of people, you're gonna get freaking garbage. There's not 500,000 is gonna get you a shack. You're absolutely right on that. All right, I got a couple more questions on this. I have a big list of all these things, and I'm just kind of going through these because they're things that I thought about over time right now. Let's see. I've also read we're seeing massive rise right now in discussions about affordable housing and wealth inequality. Harris's tax credits for first-time homebuyers and low-credit housing aim to address this, but could it be a burden of her proposed tax hikes on developers deter new projects in those sectors? What's your thoughts on affordability with housing and Harris's campaign to credit first-time buyers, which I think is already happening now. First-time homebuyers get credits when they're purchasing properties in California. I don't know about other states.
And there are certain provisions within the tax code. Let's say you have a 401k or an IRA and you need to use some of those funds to buy, right? Like your first home, you're able to take out some of those profits and, gains that you have tax-free, or we'll say penalty-free, to do that. And I think the biggest pro here, other than just more government revenue, would be more accessible housing for people. So I do think that that is a good pro. Because I also am against this, like you see BlackRock gobbling up all these single family homes. I just think that there's something wrong for that. As a business guy and like a capitalist, they're like, hey, I'm all for it. But that you're squashing the little guy. You're like bad. And you're just inflating prices because now you're turning everything into a rental market. People can't afford it. And I really think it's a bigger problem of wages haven't kept up with the cost of goods. Employees are not making more money while things are costing exponentially higher.
Absolutely not. And I think that's what's wild, man. But also, like, you increase like California did this. They increased the price. They increased the minimum wage. Then all of a sudden, a burger at Carl's Jr. was $7, and now it's $14.90. Like it's a $20, dude, for a freaking Famous Star, a Coke, and crisp cut fries. And don't ask me how I know that. I didn't get 2 chins for no reason.
That's crazy,
but dude. Of course, the prices of freaking goods are going to go up. It's freaking wild to me, dude, to think that. And again, this is like a common sense scenario that sometimes most people, like, it doesn't grasp in their head. They don't get it. And that's the hard thing. It's like, it took me years to figure that out too. Like, I didn't think in dollars and numbers ever, up until probably a few years ago. And then you start to see things in a different light. Once you start to put you start to realize, if you're going to raise minimum wage, the cost of goods is going to go, like, everything's going to go up. A minimum wage for restaurant workers. Yes. Our freaking McDonald's cheeseburgers are going to go up in price. And
that's what happens, right? When government comes in and forces these policies on the business, as a business owner, I'm just going to let that shit roll downhill and just pass that on to the consumer. So it ultimately is not helping the person that I think that they're set out to help. And that's like, I remember you have Cane's by you, like Raising Cane's.
Yeah.
Bro, it's $16 for a Caniac. That's 5 chicken fingers and some fries. And maybe you get a coleslaw and a piece of toast. 16 or 17 bucks. That is incredible.
Dude, I remember when I was a kid, you're probably not old enough for this, but there was 29-cent hamburgers and 39-cent cheeseburgers on Wednesdays at McDonald's, bro.
Yeah, no, dude. that ain't happening now. I feel like you're paying $9 for a Happy Meal. That ain't even now. That's not even
wild.
Close now. Yeah,
wild. Let's get into the broader economic and tax impacts here. I actually want to talk about Social Security and Medicare taxes, especially under the Harris plan. They're looking to increase the net investment income. How would this hit high-income earners and business owners? Or do you actually see Social Security and Medicare taxes? I don't actually think there's going to be Social Security in the future.
I don't either.
I probably am not going to get Social Security, which is why I invest in real estate. That's my exit strategy right there. What's your thoughts on, the Harris campaign right now when it comes to discussions about changes in Social Security and Medicare taxes?
My note here is passive income. So we talk a lot about passive income as a real estate investor and tax guy. Passive income is, for lack of a better term, stuff that you are not materially participating in.
Yeah.
And so I think that on to the specific point of the net investment income tax, as an investor, again, if you're going to tax me too much in this area, I'm going to go and try to earn money or place investment to receive a return back to this side where I'm going to get more tax preferential treatment. So that's my thought as far as the net investment income tax. You're going to shift the investment strategy to these high income earners. Is that going to trickle down to me? Is that going to trickle down to the person that makes 800 grand even at a high tech W2? Probably not. But you're trying to really shift the way that these people that have a lot of money are doing things, and business owners, because ultimately that will affect the employees.
Yeah.
And the larger population. But Social Security, Medicare, I got to say, I'm with you. I pay into it, obviously, as someone who worked a W-2 job up until I ran my own business. I am still a W-2 employee of my own business. I just feel that I won't see a dime of that. And so I just think that that's a program that was poorly ran and honestly needs a complete overhaul. Because I don't know, like, even when you think about the funds that you would be able to, again, with inflation and everything, let's say that check is $3,800 a month. You're going to maintain a household and live your life on $3,800 a month. I think we all have seen enough reels online and come to no, you're not going to be able to do that. So to me, it's just like, I wouldn't even worry about that. And for anybody watching this that even is in that boat thinking, oh, well, don't worry, I have Social Security, Medicare. I have a feeling there's not many people that think that, but I don't think my advice would be, you can't rely on that. You're going to have to find a way to produce income in this. I like what you called it, digital nomad age. Like, go on the internet, spend 8 hours scrolling, find something that you're interested in, find a way to start generating some income on your own. Cause I would not rely on programs like that.
Definitely not, man. I think that's going to be gone. I've actually thought about that for years. I remember my dad, when he was still alive, when I was a kid, dude, he was telling me when I was a kid, and I'm talking like 12, 13, 15 years old. He's like, you better start figuring stuff out because this Social Security stuff's not going to be around. We're going to get it, but you're not. Like, my dad was telling me that.
That's the saying too. We're going to get it. You're not. I've heard that. Yep.
He literally is telling me that. And my dad was a pretty sharp guy when it came to like politics and like, understanding numbers. He was a biology major, super, super smart on anything that had to do with numbers and stuff like that. So, and he was telling me that years before we started hearing things like this, which is crazy. I want to get into the Trump talking about tariffs and imports and Harris leaning towards environmental tax and policies. I don't really know what the whole thing with tariffs. Do you know much about that, Matt?
Yep.
Can we talk
enough to explain it to some extent? So here are my notes here is two-way tariffs. I can tax a U.S. company a tariff for importing goods from China. So for context, I'm a home builder.
Mm-hmm.
Trump basically, and let's just write for ease of example, government, Trump, whoever goes, hey, I'm going to tax you. I'm going to propose a tariff, or I'm going to, place a tariff on goods that you buy overseas. What does that do to me as a developer? Increases my cost to produce the product that it is that I want to produce, which what does that do? Ultimately, one, make me really reconsider if I want to do this or what level of activity I want to maintain, because now it costs me more money to do. So what volume of activity? But also what I'm going to ultimately charge the end customer. If I build homes that I'm going to sell for $400,000 and it usually costs me $180 to build them. Now it costs me $220 to build them. Now I might sell that home for $440. So I'm already inflating comps and what those sale prices are in that area because my material costs are too big. That pen you're holding, if it costs them twice as much to make, you're not going to buy it for the same price that you bought it for.
Yep.
Conversely, I think what he means when he's basically saying, oh, the way that we're going to bring in, this tax revenue or, revenue to the country and bring down, sort of this deficit is taxing basically companies that want to, let's say foreign companies that want to sell product here and basically placing the tariff on the other side, import tariffs, like I guess you would say. But when you're focusing on this side, let's say that, again, I'm a builder and I source steel and I source wood or whatever the material is from overseas. It just means that my cost to produce that is going to be higher. And so I think that is what, when you specifically look at real estate, can really start to have we'll say negative effects on, because what is it now? You have so many people complaining how expensive housing is. Well, if your material costs only go up, then I think you're going to run into a bigger problem.
Yeah. Which we've seen a lot during COVID when supplier chains were not coming through, right? There wasn't a lot of stuff.
Yes.
Everything was super freaking crazy. In fact, I was going through a massive down to the bones remodel at that time, and just the cost of lumber went freaking, it doubled, dude. And my project ended up costing me about $150,000 more than we projected, based off of a 6-month change in and lumber. Like literally the prices of it was going up. Yeah, it was wild, man. Thank you for answering that. I think that's important. What about so
Well, I will say too, last thing on that is the only good, the pro is you could say that it's going to incentivize people to use US companies and buy their material.
Got
But
you.
what's wrong with
What
US material? It's already expensive. So
It's
it
true.
doesn't necessarily fix that problem. So yeah.
And you know how I feel about that too. That's a double-edged sword because when I first started off, I hired folks in overseas, right,
Yeah,
in the Philippines
I
to
do.
work with me. Yeah, and you do too. It's especially important for starting off when you're starting a business off. But then you look at these massive companies that grab a bunch of their goods from other countries. Like that's where my business brain, the capitalist side of me, is like, well, like what's actually fair right now? Like I get it, you know.
Yeah.
And I think that's where it gets to that line where again, most people, if they're not running a business and understand that part of it, don't necessarily get it because there's still a lot of costs that are associated with running a business. And I think most people don't understand that, right? Your company might make $1 million, but you're getting 20% of that at the end of the year. Like you got a lot. There's
You're
a lot
just
of
trying to pinch a couple pennies. Exactly.
exactly, and that's what it comes down to. And again, the general public, and I'm putting folks that don't necessarily understand that into that general rule because I don't think people necessarily say that. They might say like, yeah, you made 1.8 and whatever, that's awesome, but you're not paying taxes or whatever. But yeah, I have like we actually are paying taxes and we do have high overhead. And I started hiring people here, so this year completely different from last year, right, and different from the year before. So I think growth is really, really important. But what's your thoughts on this? Because I know Trump is pushing for tariffs, and Harris is leaning more towards environmental tax policies, which we've had environmental tax in California for like a long time. Even like we're even being charged for like EV stuff now. It's freaking crazy.
Yeah.
What's your thoughts on that? I mean, I don't necessarily think there's one that's better than the other here. Do you know much about the environmental tax at all? Any of those policies?
Not a ton, but enough to say that my comment here is I don't think they're a bad thing to some extent because I think that you need to consider everything, which includes the environment, right? And I'm not some global activist or climate change activist, but my thought here is what you run into is more red tape, which ultimately hurts the person that you're trying to tax more because it adds up. Not only are they paying the tax now, but the red tape of trying to see if they qualify or have to pay, and let's say even paying a professional. That's why you could say when you start to roll out these rules, who are these people going to go to for help in navigating them? They ultimately have to go pay somebody to help try and whether it's dodge the tax that just came out because let's say that they qualify for some exemption like BOI. People were freaking out about that, but they were trying to find an exemption of maybe why they wouldn't need to do it. EV tax, whatever the case is. So for me, any sort of environmental regulation, I immediately think way more red tape because these programs are new and it's like PPP and ERC. You rolled them out, not necessarily as a half thought, but you now are dealing with people learning new rules. And with learning new rules comes with a lot of mistake and penalty, like penalties. Like if you're late on doing something that you didn't even know that you had to do, but they're still going to penalize you for it, that's a problem. And so that is what concerns me with those kind of rules coming out. But I don't necessarily think they're bad in the sense of if you're paying a tax for something that necessarily makes sense to where they should allocate dollars to, then it makes sense.
Yeah. What do you think about global warming? You think that's real?
Dude, I don't know. I'm in Vegas. Let me tell you this. It's been the worst summer. I was born and raised here. Okay.
Yeah.
And what's funny is I'm walking my dog the other night, neighbors from Russia, somewhere else. I think Russia comes back. And I was like, oh yeah, you were traveling. She was like, yeah, you guys made the news for how hot it is here. And I was like, oh, like in the US? She's like, no, in Vegas, like Las Vegas made some sort of record. And I was like, oh my God. So whether global warming or not, dude, I don't know. But this summer was brutal in the desert. Like I want to find a home in Montana. Pace has me all thrown on this Montana idea.
I know. Doesn't it look cool, man? Like to just live, like have like
the
a
trees and the water, but I'm just not trying to get mauled or any of my kids mauled by a freaking bear. I forget how many bears are up in Montana, dude.
There's bears all over the place out there, but it looks so peaceful, man. Like I would love to have a piece of land out there.
Okay. Well, I have one thing that I wanted to touch on.
Go ahead.
It was the most recent, and I have a note here. So this was specifically for small business, and here's the specific piece that I want to talk about, and this is the note that I have. Current federal tax laws of now. Under current law, small business is effectively treated right similarly to any other business. But here is what they're trying to propose from Harris and Walz. And this is the part that I just had a huge debate about this yesterday. And it was somebody that doesn't understand tax. So it was like, it wasn't even a debate. I'm like, you don't even know what you're talking about here. Let me help you out here. But this is what got me is because it just shows you the perception of what people have when it comes to taxes versus the reality. And I'm like, oh my God, there's a gap. Like the amount of tax knowledge that the general public has is nil, zero.
There you go.
So This is the part that really got me. Because again, as a small business CPA, Harris and Walsh, this is the proposal. Proposals is expanding the startup expense deduction to 50 grand. Currently it's 5 grand for small businesses. Proposes developing a standard deduction for small businesses as well. Hey, love the standard deduction piece. Great. Just like as you as an individual, a married couple, you get a standard deduction. We just call that the freebie by the government.
Yep.
And Trump advanced, there's no specific tax related proposal because they're just going to say leave it for what it is now. But
Yeah.
what I was debating, and again, not even debating, was the perception of this person. And I saw a clip where she was talking about it, right? Kamala. And it was like, we're going to give a $50,000 deduction. And what this person was thinking was that they were thinking of it as a credit. So let's say that you're a small business, you crush it. First year, you make 70 grand.
Mhm.
They were thinking that they would straight up get a $50,000 deduction and only pay tax on 20. And I was like ready to lose it. I'm like, okay. I'm like, well, do you understand? Like, do you just think they're going to get 50 grand off the top and not have to do anything for it? And they're like, yeah, thinking of it as a credit. And that's what a lot of people mistake is a credit is just think of it as credit given to you. That's a dollar for dollar reduction off your tax bill. A deduction, you have to spend money for it. They were thinking that you would just it's almost like the Schitt's Creek scheme or that Schitt's Creek thing where it's like the write-off people. I don't know. Yeah. And it's like, so what I wanted to like make clear here is that for you to get this deduction that she is preaching, this was a big one for small business. You will need to still spend the money within the business. She's just allowing you to take a little bit more of that loss up front. You're not going to get a flat out $50,000 deduction like a gift because you're a small business and the government loves you. So it was just, I was so shocked to see that that's what this person was thinking when I'm watching this. And now you think about it when I'm like, no wonder people are hooting and hollering at this. They think it's so wonderful when I'm like, but it's not even what you're thinking it is.
Yeah.
And so I found that to be a little concerning because I'm like, wow, the way that you don't have to sit here and explain how it works. That's not your job as a potential presidential candidate. Right. You're a salesman. You're trying to win this. So you're going to leave this as vague as possible. And so that was killing me to think like, did you really walk away thinking that shit? Because that's not exactly, that's not at all how that happened. So that's what I want to make clear was,
Let's actually talk about this for a minute because I actually talked to somebody that was like, this is going to be such a good thing. I wanted to start a business. I'm going to wait till later next year to start at the beginning of the year. And I'm going to get $50,000 in order for me to do that. And I was like, you're not going to get, no, I was like, you're not actually going to get 50 grand. They're like, but it's a deduction that you get. And I was like, yeah, but it doesn't work like that. Like, nobody's going to give you anything to start anything. You were getting stuff during PPP and those people are going to prison now. People are having to pay it back. That's a totally different thing.
Run the math.
This is totally different now. Like
here's how this works. Let's say you start a business right now and you have $50,000 of loss. You lost $50K. You started a new business and it didn't work out well. You put $50K into this business. Current rules would let you write off $5,000 now. And then you'd take the remaining $45,000 over 180 months. So times 12, you would get a $3,000 because basically, right, it's $250 per month. So you get $3,000 and then the $5,000. So you get $8,000 deduction. Mm-hmm. She's allowing you to take all 50 up front. But you see how I had to spend the 50 to get that.
Yeah.
So if I only spent 10, she's just allowing me to take my 10. So it's like the current rules aren't that bad. They're just making you take the loss over more time. But let me tell you this too. Let's say that year 2, you get into this business and you're like, this is not for me. This is not working here. And you shut the business down. You're entitled to take that entire loss for what it was anyways. So it's like, it just killed me to watch and think that that's what people think, like that's what they're thinking. And I'm like, this is not. Oh, it just rattled me to my core, man. It got me. It got me fired up where I was like, we're not even debating here. You need to learn what this means. But the way people were interpreting that was, I'm going to get a $50,000 deduction. And then you get people that, I think that's what COVID did too. Back to COVID quick is like, you had a lot of people that were like, I'm ready to go do my own business. And then they're like, yeah, no, this is harder than I thought. I'm going back. You had a lot of people going back to the W-2 life because they saw how hard it was. It's not easy.
Yeah, it's freaking hard, man. I'm not gonna lie about that. It's no joke, especially the first couple of years when you're like trying to figure it out and you're scrapping to get by, and sometimes you got to try to figure out payroll, and it's freaking not. It's not fun, man. I don't wish you have to be a special kind of weirdo to want to do it. I'll just tell you that.
Agreed.
And if you've noticed that, like the business owners that are pretty successful, dude, they're all a little weird. Like, have you noticed that?
Oh yeah.
Like everybody's a little weird. But that's a good thing. Like, I want to be around the weird people. I know we're getting to the top of the hour right now, Matt. So I want to ask you a couple things right now, based off of all the tax strategies that we're seeing right now. Who do you think has a better strategy and why between the Harris campaign and Trump campaign?
purely Trump for the reason of I've already seen the policies that he put in place benefit our clients, not just hypotheticals of people online. I've seen them benefit people that I work with. And two, I honestly, I like a businessman in office because I think that irrespective of foreign policy and everything else that you could talk about when it comes to just politics as a whole, I like somebody that would want to run this more as a business because at the end of the day, a business needs to run profitable. Its employees, which are its citizens in this case, need to be happy. And so as a businessman running a small business, not huge, I like those traits better. And I don't think that she has that. But as far as tax policy, 100% Trump, for sure.
What do you feel? Because I hear this all the time. People say, yeah, you got Trump in there, but he filed bankruptcy 10 times or whatever. So like, how is he actually able to run stuff? Like, what do you think about when people say that? Have you heard that before, by the way?
I have. As weird as it sounds, this is where like, I don't even think you would talk anybody off of that side, no matter how much evidence or not experience, because experience would get them to understand. You couldn't even bring an argument to sway somebody that thinks that. And so I just think that it's a lack of experience to understand sometimes how business works. And it does sound shitty. It sounds like, well, what a failure you were to do this, this, and this. But then it's like, when you really look at the technicalities of them at times, it's like, oh, that made sense.
Yeah.
So what do I think about that is I think about, yeah, it maybe shows a sign of failure, but just as we said, as a business owner and to be successful, there's no way you're going to have massive success in any sort of industry or opportunity in life without a few setbacks. And so I just honestly don't even, I try not to debate people on that because I'm like, I'm not going to sway you off this.
I know. I say the same thing too. It's like, and I also hear things like, his dad gave him $10 million to start off.
I hate that. I hate that one. Because that's like rich friends. We all had rich friends. Do you hold it against your rich friends that, hell no. If anything, good for the parents, dude. I hope to make my kids filthy rich. Do I want to just leave them money? No, I want them to work for it. But God, that's the whole goal, man. Leave a hefty nest egg for your family. Can't hold that against the kid.
But if you give somebody $10 million, first off, they're not even going to know what to do with it. And then second off, not every business is going to work. And I think this is where like most people don't get it is that most entrepreneurs, I can't tell you how many businesses I've failed, even in the last 4 years. Like there's a couple of businesses that I've failed at publicly, right? They didn't work. They didn't work out. Sometimes you got to file bankruptcy. And again, I think that sometimes people just don't necessarily understand that because they're not in business. And it's hard. You're right. It's hard to talk somebody off a ledge when it comes to that. So Matt, what's your forecast? Who do you think is going to be winning this coming up? I know that there's some polls that are out there right now.
We were just talking about this earlier in the office. My friend was saying that the betting market right now, I was like, oh, are you talking about the poly market? That's what I've been seeing come up on my feed. Yeah. And they're saying he's leading by, it's like a 58, something like that.
You know what the poly market is?
No, what is that?
It's the betting market. It's like a part of the betting line.
Oh yes. And they were trying. So I saw that and they're saying, I think he will win. I honestly, I hope he wins. But then I saw somebody the other day say, oh, well, here's the S&P 500. When you typically see an S&P 500 increase prior to X amount of days in the last 30 years, so-and-so is one. So I'm like, I see such conflicting. The internet's getting me good. They're taking me this way and they're taking me this way. They're not just leaning one way. So I honestly don't know. But my chips, I would guess him. I think he's going to win. I think personally, I don't care to say he is. I think he is the better choice. But whether that happens or not, I don't know, but I think he'll win.
Yeah. No, I definitely, I definitely think that is probably going to happen too. And I think that what is it called again? Poly market.
It's like poly market is what I've seen. Yeah.
It shows it shows the U.S. and it shows all the red states, which they look really red. The U.S. looked red. It looked like California was blue, New York was blue, and then some random.
A lot of the East Coast. Yep. Upper East.
But that was it. There's just like little pieces of there, but I don't know. We'll see what happens, man. I think this is going to be an interesting November coming.
We're getting close.
Yeah, we're about a month and some, not even a month, probably like
3 weeks. Yeah, 3 weeks. I think it's like November 5th is like election day.
Yeah, which is coming up. But we're in middle October as we're filming this. It'll probably come out next week sometime. But Matt, where can folks go find you if they need to work with the CPA? They like what they hear from you. They like what you got going on. You work with small businesses. You're not working with those $100 million businesses. Where can people connect with you at?
Our website would be the best website. And then I'm pretty active on Instagram, which is just my name at Matt Bontrager. And then our website is truebookscpa.com. That's like, you want to see what services we offer, talk to us about how we can help. That's that route. But if you just want some tax tips and a loudmouth online, that's me. That's my Instagram.
Matt, what's some of your favorite, are you a big music guy? What's some of your favorite bands or anything?
I like music. I like music a lot.
What are you listening to right now? What's in that Rolodex you got going on over there?
Let me open this first. I like a big range. So I like a lot of, like, Wallen is huge. I got young kids. I got 3 young kids. I have twins that are 3-year-olds. And then I have a 5-year-old. And I brought my 5-year-old to the Morgan Wallen concert. We are huge. We're in our country era. But I like a lot of rap too. So as bad as this and controversial, Tory Lanez. I like Tory Lanez. I'm looking at this now. Post Malone. I'm a huge Post Malone fan. So and this is where I'll say this. I like the mumble rap in the sense of, me and my friend Steven debate about this. He's like, yeah, but the words. I'm like, I don't care about the words. This isn't open mic night and poetry. I want the sound. It's music. I care about what it sounds like. So I like a huge variety of music.
I love it, dude. What's your favorite post song?
Favorite Post song?
You're gonna say Fortnite with Taylor Swift, aren't you?
No, my wife is a huge Taylor Swift fan. I was like, that song sucked. She gave him no time at all to really do any sort of music in that, or any sort of verse in that. I've been listening to Big Lie, which is one of his older songs, a lot.
I love it. I love it.
Yeah. Posty's, he's my guy.
Every episode, I usually end the song with something that I like or something that my guest likes, and we're going to end it today with Posty, the song, your favorite song. So, Matt, it's been a freaking pleasure having you on here, man. I really like what you have going on Instagram when you do the blue screens and you're talking about stuff behind you, like some of the policies that are coming out, getting your thoughts. And I think it's important to hear people's thoughts when it comes to these things. And again, the cool thing about being on the internet is we get to resonate with people. So go check out Matt's stuff. He's got some really great content out there. Matt, it's been a freaking pleasure hanging out with you, man. And we're going to be playing Post Malone right now. What's the song again, Matt?
Big Lie.
Big Lie. Here it comes up. Thanks, bro.
Thanks, brother.